Okay, should be working. It's a miracle. Not only that it's working, but I'm on time. Um, so yeah, Steve, I don't think you and Greg have ever met. So I'll let you guys kind of introduce yourself. Steve, thanks for doing this. And I saw your post about the new marketplace stuff coming up and how deductibles and this and that. And it's like, dang, why didn't I ever think about talking to Steve already? That's a great topic. So I'll let you guys intro, and then, man, we'll just kind of let you have the floor and tell us what you're seeing out there in the health insurance world and things that, someone who, act like you're talking to a first grader, and what does someone need to know,
Yeah, absolutely. Sure. So let me introduce myself first. So, hi, Greg. Good to meet you. My name is Steve Stump. I'm an insurance agent. I actually started in the health insurance space and then broadened it out to handle all personal lines. So now I handle home, auto, health, and life insurance. But health is still a very, very big part of my business. I'm located here in North Texas, but other than the home and auto, which I can only do in Texas, I can work with health or life insurance all across the country. But happy to talk with you guys about what I'm seeing in health insurance. But Greg, please introduce yourself.
Yeah, I'm actually an insurance agent as well. So me and Mark went to college together. And sometimes I'm his personal assistant, sometimes I'm his reality check, but most of the time I'm just his insurance agent to listen to clients too. I do not do life and health. That's something I did not want to get into. The details, the ins and outs, the licensing. Just never had an interest in it. Confuses the hell out of me. So to reiterate what Mark said, feel free to talk to us as if we just learned English. When it comes to health, insurance, if you do property and casualty as well, you know that even on that side, it can get confusing, very legal in terms of the languages and things like that. It's almost intentionally confusing. I feel like health insurance is a little bit more in depth on that end. But yeah, I would love to hear kind of what's going on. I don't go into the marketplace for health insurance. My wife works for a hospital, so I have no idea what any of that looks like. I just know we have it.
Yep. Okay. Perfect.
And,
Yeah.
and Steve, you'll have to confirm that I don't go to the marketplace either, right?
You're right. No, you don't.
Yeah. See, and that's the hard part is with health. Even I have it. We get one of my favorite questions I like to ask guests is like, hey, what kind of cold calls do you receive? Well, I get a ton of people cold texting and stuff about health insurance, and it's like, oh, you're self-employed and health and this, and we got the best program. And so there's so many options of it. It's so confusing that even the stuff that I know we've talked about at length, I still don't know.
Right. Well, yeah, I will. If it's okay, let me go back about 15 years because that's when health insurance started to change dramatically in the U.S. So you remember President Obama, and I've said this before. I truly believe that he wanted to do good with basically health insurance for all. You remember he told the story of his mother and how she couldn't get coverage, and that was his mission as a president to improve health insurance. But when big companies get a hold of big legislation like that, like United, Cigna, Aetna, Blue Cross Blue Shield, they tend to form and shape that legislation for their benefit, not really so much for the the benefit of Americans. And while I believe he wanted to do good, I also believe that all of the lobbyists came in and kind of formed the Affordable Care Act, also known as Obamacare legislation, for their own benefit. And that dramatically changed health insurance from that point on. So what they did back then, and it's changed since, but everyone was forced to go into the government marketplace. The Affordable Care Act forced all insured that weren't getting it from an employer to get it from the government marketplace. So Greg, you know this, the bigger your pool of people are, the risk is spread out more, the premiums are higher. And so that was a way to basically reduce the risk for health insurance companies to participate in this marketplace, because if you force everyone in there and then the government pays a subsidy on top of that helps people afford those premiums, then you've got a lot of people in there that probably aren't using the plan. A lot of people don't know this. Half of our population accounts for 80% of all the healthcare expenditures in the U.S. So if you force everyone in, then half of your population is using 20% of the healthcare spend. So that's what the Affordable Care Act did, and that was for the benefit of the health insurance companies. It's interesting, if you look at stock charts, the price of those stocks for like a United, Aetna, United is probably the most prevalent. If you look at their stock price since 2010, it has gone nothing but skyrocket high, because now the government has come in and has subsidized their business by paying for the individual's premiums. So the government marketplace is one option, and that's a good option for those that have health concerns, because those companies can't deny coverage for any reason. And so the alternative is go to the private market. If you're not getting it from an employer, yep, there you go. Yep, you're back to 91. Can you go to 2010? Or there it is right there, 2011 to, yeah, so what was that? I'm near zero. I know it wasn't, but here we are at 600, and now it's down to 307. So that's amazing. And that 307 drop, that's when that CEO, that executive was executed. And they've gone through a lot of turmoil since then. But yeah, that's a great example of just the benefits that the health insurance companies have seen. So then you go to the alternative. So if 50% of our nation's population aren't using very much healthcare, the alternative is to allow people to go to the private market, which they couldn't do without penalties. Thankfully, in Trump's first administration, he did away with that penalty. And this allowed people to go to the private market and not pay a penalty. That requirement to go back into the marketplace with all of Biden's efforts, he couldn't make that happen. So the penalty for not participating in the marketplace isn't there anymore. And that's a common myth. A lot of people think, oh, if I don't participate in the marketplace plan, I've got to pay a penalty for that. That's not the case anymore. Now, fast forward to the last presidential administration, Biden in his big legislation dramatically increased the subsidies. And so a lot of people would get those marketplace plans and they wouldn't pay anything for them. It'd be a $0 premium. But their deductible would be $7. And so there's always two costs when it comes to health insurance. The cost of having it, the premium that you pay every month, and the cost of using it, which is your copays and your deductible. And some of these $0 plans don't pay any benefits until you reach the $6,000 deductible. So effectively, you don't have health insurance. And I think, Mark, this is what you responded to, because Mark, you recently tweeted that, and I reshared it on one of my social media platforms. So with the private insurance options, those companies insure a healthy group of individuals. And when they do that, it's like insuring a good group of drivers. No one gets in accidents, so we can lower the premiums, right? Well, when you have a healthy group of individuals that don't go see the doctor very often, you typically see rates 40 to 50% lower than unsubsidized marketplace plans. And so I work a lot with those plans. You're right on, Greg. There's a lot of complexities in health insurance. You got government marketplace, you got private options, you got Medicare. I don't work with government marketplace or Medicare because of those complexities. I like working with these private plans. I have referral partners for those when it's a best fit for my clients, so I can get them taken care of however I want. But I don't specialize in it. I specialize in those private options. And now what's happening is truly, truly interesting. There are companies that are expanding their group health insurance plans and allowing individuals to participate in their group plan and become an employee of them. There's two of these companies out there that they're data analytics, data research companies, and they have expanded their group health insurance plan that allows you to become an employee of them. And for being an employee, you have to complete these brief surveys. They're anonymous data, but it's collecting health and wellness information that these companies use for their data analytics and research. And then that gives you access to a private plan. These private plans can have deductibles as low as $250. And they give you access to PPO networks, which, if you don't know what a PPO network is, with a PPO network, you don't have to get referrals to go see that specialist that you want to see. The alternative is an HMO. With an HMO network, you have to go see a primary care physician, and then that primary care physician has to give you a referral to go see that orthopedic or that dermatologist, whatever that specialist is. And so a lot of people don't like that extra step. And PPO networks tend to be very vast. They're really large networks. HMO networks typically are very smaller and sometimes even regional. So, Mark, you're traveling. If you were in an HMO network and it was in the north, in your region of the country where you live, and then you're traveling and something happened, you might not be able to find a doctor inside network. It just depends on the size of your HMO network in the region. But it's going to be
Yeah, so that
interesting
means
what happens.
offices could literally turn me down, even though I might need
Oh,
care.
yeah,
There's,
absolutely.
we don't think you're insurance.
It's going to be interesting to see what happens over the next 3.5 years now. Trump has said he's not going to extend the subsidies, so those are going away. And I'm seeing and reading anywhere from about 75 to 150% increase in the marketplace premium. The reason being is there was, I think, 14 million people that went into those plans over the last 4 years with Biden's subsidies. Well, if those individuals aren't getting those subsidies, they're not going to renew. And so now the insurance companies are looking at it and says, okay, we've got less people in our plan. We're not getting the subsidy from the government. So they've got to increase their premiums to offset their losses.
Mm-hmm.
So it's going to be very interesting whether the marketplace plans can even stay affordable or not, because a lot of people that have gotten large subsidies and cheap plans or $0 plans, they're going to get sticker shock this year. But if they're healthy, they've got a great alternative in these private options. It's basically a subsidized plan because you're insuring with a group of individuals that are also healthy, and it's lowering the cost for everyone involved. And these
So
plans are
then,
robust.
what's your hypothesis then for, let's call it the underserved, or the folks that might not be as healthy or might be lower on the income, social, economic scale, whatever you call it? What's your hypothesis for them? Basically, the only ones that are really relying on that marketplace at the moment. Now, first of all, are they even really getting good coverage with that marketplace? And then, what do you think if it does kind of start going away, or they're getting a sticker shock? What do you think might happen to those folks?
Yeah, so that's a great question. So in my opinion, I don't think they're getting great coverage anyway. So if you got a $0 plan, meaning it didn't cost you anything, or maybe it cost you less than $100 a month, you definitely had a very high deductible plan. So again, there's two costs. There's a cost of having it and the cost of using it. So let's say your plan is $0, but then you get sick, and you've got to pay $6,000 before you get any benefits from that plan, because that's what your deductible is. And then if it's a family, your deductibles are typically twice. So that's an individual deductible. So now you're talking about a $12,000 deductible. So a family that couldn't afford health insurance to begin with now is faced with a $12,000 basically mountain to climb before they get any benefits from the plan that they thought they had. So I think some people are going to realize that and switch over to these private plans. If they're affordable, they'll make it work. Others are just going to go without, but effectively they were without before anyways. And then depending on the state, Medicaid is still an option. You have to be very low on the poverty schedule to qualify for Medicaid plan, but those are still an option as well. And then Medicare is a great option for over 65. If you're over 65 anyways, you weren't participating in the government marketplace plan, you're on Medicare, but some of those 64-year-olds that might have been on a marketplace plan last year, they need to look at a Medicare plan this year.
So what do you think the solution is? I mean, I oftentimes criticize property and casualty insurance, right? I sell it. I'm very versed in it. I have companies I enjoy working with. They're great partners for me as a broker. They're good with clients. Obviously, there's those outlying incidents, but there's a lot of things that I think could change just based on common sense. I'll defend, but I'll also criticize. What do you think, just in your own experience and what you view from a common sense standpoint, could be a potential solution? Because hearing you talk, it sounds like there just needs to be more marketplaces, more smaller segments, because the analytics departments that you talk about, Sounds a lot like car insurance. If you have 3 claims, they don't want you anymore. They want good drivers to keep rates low and increase volume of clients coming in. So it sounds like they're kind of taking that process into health insurance, and bringing insureds in as employees, as you said, for a PPO network.
Yeah, and healthy employees.
Mhm.
Um, so I'm a big fan of less government is better. Free markets should control, and that's what I think is kind of the downside. There's other things that challenges us in the United States for health insurance. But when the government got involved, and you saw it in that stock chart, the companies benefited, and a select few, we call them the BUCAs, the BUCA, BUCAs, the Blue Cross, United, Cigna, the others. Those are the big monopolies in health insurance, and they all benefited from the government's involvement in health insurance. I feel like the free market needs to take over. I feel like the government needs to be out of the health insurance game and let the free market innovate with innovative plans. You've got the ones that insure healthy individuals. You've got ones that do it through sharing plans. Now, health sharing plans are not health insurance, but they're pretty innovative in what they're doing. And then you've got the BUPAs, the ones that participate in the government marketplace. But with all that said, we've got some other big challenges in our country when it comes to health insurance. And you hear this in the news all the time, that a procedure that costs so much here in the United States, maybe tens of thousands of dollars, costs thousands of dollars across the pond in Europe. Or a medication that costs hundreds of dollars here costs tens of dollars in another country. Unfortunately, there's just a lot of, I guess, hands in the till, if you will, when it comes to the healthcare expenditures made in the U.S., and everyone's got to get their pie. And it's an entrenched industry that wants to continue to be entrenched and see those profits. It is going to be a massive undertaking, which, ironically enough, the government's going to have to get involved trying to break this up. But it's going to be a massive undertaking. Part of this industry out so that we can innovate again, just like we innovate in a lot of other areas in our economy.
Right. So I mean, I'm going to reference property and casualty again, just because I think, for all its faults, I think it's handled pretty well. The marketplace is from my understanding, all these companies are private companies, and then you have your fair plans per state that fall in and provide coverage, guarantee a safety net of some sort if the private companies are just like absolutely not. So do you see that expanding, and what disruptors? Because off the top of my head, things like Cost Plus Drugs, Mark Cuban's pharmacy, where they tell you the price transparency. And then also I've heard of some medical practices, they're just going away from insurance altogether. They're just completely transparent with their costs, and they're saying, here's the cash price. If you don't use us, you don't pay us type situation. And they're growing. I would think that bucket needs to fill quite a bit, and it's a large bucket before it disrupts, those big four that you mentioned.
Yeah.
But do you think that those things are a good start to kind of disrupt it? Like you said, you want government out, but you almost need government to step in to step out.
Just to break it apart. Yeah.
Right.
Yeah. That's where, the market's got to have the control, the freedom to do what it wants to do. So you mentioned the doctors. There are a lot of doctors that are just going direct. You'll pay a subscription fee, which I think is a great model, and you get access to that doctor so many times a year. And insurance isn't involved. For the doctor benefit, they don't have to have back office. They don't have to have their money tied up, because those insurance companies will take anywhere from sometimes 45 to 60 days before they pay out a claim. So the doctors reducing their headcount and back office administrative staff, they're not having their money get floated by the insurance companies, and they're getting a revenue stream each month in terms of that prescription. I think it's a great model, and that's continuing to grow. And the unique thing is, there are some private insurance plans that will reimburse the member for that subscription plan. Every time they see that doctor, they basically get reimbursed for that subscription plan. So there's a way to actually now blend this direct model with a health insurance plan that will pay for that subscription as well. Yeah,
So
what
I can
Mark
step
does
in here for a second.
Mhm.
I'd like to step in because, first of all, keeping notes of things. Greg knows I'm historically terrible at letting people talk, and I interrupt because I hear a little nugget that I want to go on a different rabbit
No,
trail
go
on.
ahead.
But for this one, what you just said, that's roughly my experience, right? So like we talked about a couple different things that relates to me. So I tried to have a primary care doctor. I haven't really appreciated that model very much. I maybe go to him so I can go to another person or whatever. I don't know. But I went to, instead of going to a primary care doctor a few times, I went to a place like urgent care. And I ended up getting checks back every time I went to urgent care. So I gave them my copay or whatever, and then I got money in the mail a couple of weeks, month later. But when I go to the primary care doctor, I got another extra bill that I had to pay. So I don't know what, maybe you can explain how my plan works. I think is what you're talking about, right? I'm getting reimbursed for certain things when I use the doctor.
Yeah.
So I'll leave it there if you want to talk about that.
There's two different kinds of health insurance plans in this private space. There's the ones that work off of copays and deductibles. That works like an auto insurance plan. You got to pay your deductible before you get any benefits, and then you typically share the costs in terms of copay. And then there's the model that you're on, where it's called a fixed benefit plan. So regardless of the type of care you get, doctor visits, surgeries, hospital stays, it pays a fixed amount for that care. So for the claims I see across my client base, just to go see a doctor, the doctor is going to charge a visit fee. And that typically that visit fee if they're in network is anywhere from $75 to $95. Then the doctor is going to perform care. So they're going to add extra charges, right? Well, let's say they run a lab and let's say they run an x-ray. So now that bill is $150. But with a fixed benefit plan, you got a benefit for the visit, you got a benefit for the lab, and you got a benefit for the x-ray. And if you direct pay that doctor versus the doctor filing the claim for you, you can cash pay, which typically lowers your cost. Because remember, if you cash pay, they don't have to file a claim, they don't get their money tied up. So doctors love cash pay. And then you send your agent, which is me in your situation, Mark, the bill, or you can do it yourself, and then submit the claim, and you get all those benefits back. So you get excess benefit over and above the cost of care. And it's a way to basically offset your health premium cost because you're using a plan and actually getting excess benefit that offsets.
So could you maybe answer why a place like an urgent care versus a place like a primary care doctor, I'd see a check and then the other one I would see a bill? Is there a rhyme or reason to that?
Yeah, typically I see it reverse. Just a primary care doctor is not going to cost as much as an urgent, and ER won't cost as much as an urgent. So typically I see it reverse, but if I understood you right, you went to urgent and you actually did get benefit back, and you went to a primary care and you had an extra bill, right? Yeah, I'd have to look at the bill and find out why. It could be that your primary care is not in network and the urgent care is. So that's another nuance about any health insurance plan. They'll have these networks of care providers. And when a care provider is in the network, they will negotiate their rates so that they can participate in the network and have access to all the members. So some of these networks have 1 million members or more. So a care provider will negotiate their rates so that they can have access to 1 million members and be able to take care of all their healthcare needs. So if that primary care was not in network, they're allowed to charge out-of-network fees. So that's why I always suggest if you go to a doctor and your plan allows you to see an out-of-network doctor, ask what their cash rate is, because typically that's going to be similar to what it would have been if they would have negotiated with the network. Because again, they're saving costs. Back office staff and not tying up their money. So it could be that network being a doctor wasn't.
One other point that I wanted to follow up with is the cash part. So I'm probably going to take it into a different lane and not quite exactly what you're saying, but it brings up some thoughts. I'm seeing a lot more people that I go to that are really hardly ever even taking insurance anymore that used to take insurance. And so now they really just go into a cash only model. It's better for them, their business, just like you said. But examples would be like a specialty stuff probably, right? A dentist, chiropractor, Those are the specific ones in my world, but those type of people now, they mostly just take cash. And some
Yeah,
dentists
a
I
lot
know
of people,
that are really specific, like pediatric. I know one guy who's like, I really want to deal with insurance. The other guy's like, I only deal with Medicare or Medicaid because, that's their niche. And
yeah,
that is two totally different ends of the spectrum.
yeah. Yeah, chiropractors are probably one of the biggest ones that aren't taking any insurance nowadays. There's a few. I've got a couple that I still see on a regular basis for my chiropractic needs. But yeah, I hear of a lot of chiropractors not accepting insurance. Dentists would like to go to that subscription model because a dental cleaning should cost around $150 each time. So if you pay us, what's that, 300? So if you pay anywhere from like 20 to $30 each month to be able to get those two cleanings and then have any kind of major procedures done, that's a pretty good expenditure per year. And it's going to be the equivalent of what you would have paid just in those two cleanings if you had a cash flow. And the other option that's coming up is telehealth. I always encourage my um, enrollees that if my plan's got a telehealth solution, use it. It's a great option when you know you're sick and you just need a script. But my daughter, for example, she gets sinus infection. We know it's a sinus infection. She knows it. We just need an antibiotic to clear it out. So we set up our telehealth appointment. We didn't have to drive into the doctor. We didn't have to pay a copay. All these telehealth platforms are free, or you pay a subscription for them and you can have them unlimited. But the ones that are inside the health insurance plans are free. And you get on your way to the pharmacy and get your prescription that you need for whatever ailment you have. All right,
Greg, you got anything
questions?
else, sir? Yeah, I have a couple other things I'll wrap up with at the end, but you were going on another line, so if I interrupted you, please feel free to take over. Greg, you want to ask one questions?
No, I mean there's plenty of options. I mean, we utilize telehealth. My wife's an ER nurse, so like we know what I need or what
Mhm.
she needs. So if it's something as simple as she knows exactly what would be prescribed or what the issue is, you just make a telehealth appointment within 30 minutes of filling out the paperwork on my phone.
Yeah,
I'm on the phone with a doctor, and I have the luxury of she coaches me exactly what to say. So she's like, I've had this for 14 days. It's not clearing up. It's just a cough. It's just, sinus pressure. Um, I need something. I need, a, a, a steroid. I need some sort of exprint, anything like, and it's in my hands in 24 hours, usually sometimes less, depending on what time the appointment was. So there are options. And like I say in my agency and when I talk to clients, it's more education than anything. The client or the insured has to ask the questions. And I understand there's a barrier to entry in knowing what questions to ask. But I tell people all the time, ask away. If you've got me on the phone, ask as many questions as possible. Um, because it's the only way you're going to know. If you just assume the answer, you're never going to know. There's probably a lot of people out there that don't know they have access to telehealth through their plan, just through an app where you never have to go to the doctor if you don't have any serious medical situations. And then also knowing what urgent care or what outpatient ERs, how they bill. Some of them build differently. Some of them overbill and then give you refunds. Some of them underbill. Some of them don't take insurance. Like just the ins and outs and the nuances of who you're seeing, where you're going, and what you're paying. It's very convoluted and super dense, but I think some of the onus has to go onto the public a little bit of
yeah.
you have to educate yourself. You can't rely on somebody telling you exactly what to do every day, every step of the way. You have to be proactive to understand it because at the end of the day, you're the one using it. It's impacting your life.
I am. What you're describing reminds me of this infographic I saw once. Let me see if I can remember it. It says something to the effect of most people spend minutes deciding their health insurance and deciding on their health care needs. And then it goes on, and then to buy a television, they'll spend hours. It's like eight
Right.
hours to research which television, and then it goes up. A car, it's weeks. A home, it's months. But I mean, this is your health you're talking about. And I
Yeah.
do wish more people would be informed about their health and help and make decisions with their doctor that benefits them both uh, physically with their health and financially. An example would be a doctor writes out on the script this prescription and gives it to you, and you just take it. You go to the pharmacy, and then the pharmacist says that's $100. You're like, I wish I'd have known there was a cheaper alternative because I'd have got the cheaper alternative generic that might have done the same thing. So I
Mhm.
do encourage people to take control of their healthcare decisions with their doctor and ask those questions.
Well, it's
So
really
that
hard too to find the alternative. Like half the
Mhm.
time, you don't know that there was a more cost-effective alternative with the same exact care or solution. They sometimes will tell you at the Walgreens counter, but not everywhere else they offer that. And the other thing about what I find with health, and I've been all over the health spectrum, right? I've spent time in the ICU. I've got allergies, and then I don't go to the doctor when I'm sick, so I'm all over that. But the the system is reactive, right? It is not proactive. And
yeah,
for the system to get proactive may be a hill that is never going to get climbed.
right. Well, that is the healthcare in the United States is we want to treat the problem versus fix the problem.
That's the kind of the method of most insurance. The consumer thinks it should be proactive when unfortunately it has to be reactive sometimes, right? Like the home insurance company's not going to come out and tell you, hey, you got hit by hail, I think you should file a claim. They're going to let you decide, and then 15 years go by and now your house is uninsurable and you're wondering why your rates are
But
$8,000 more
it's
than when it started. But
Yeah,
a little different with health. I mean, half the
yeah,
time,
hell yeah.
an annual physical isn't even required. Some people may, some people don't. I mean, I just got a physical randomly recently. It might be the first time ever since high school. So like, no one ever told me I needed to go get looked at or whatever. So it's just simple things I'd like to see. Maybe there needs to be a couple conditions. Hey, somebody's got to see that you're alive in the last 24 months for us
right.
to renew your insurance next month.
People are scared to as well with the health insurance. They don't want to go in and find out that there's something wrong, and then the
Yeah,
insurance
bad
company says,
news.
"Hey, we're not covering that, or
Yeah,
we're no longer going to cover you." So it's a really really sharp double edged sword when it comes to some of those.
It
People are
is,
afraid to share information. You being
but
one of them, Mark.
of course, I know.
Yeah,
I deal with underwriters and mortgages. I know enough to share.
yeah.
But there's things with yeah, it shows what he was talking about earlier with that stock going up, and that's one of the points I wanted to revert back to as well. But if you can't trust your health insurance company, if you think that everything out there is out to get you, and it very well might be, then maybe it's time for the system to be imploded. Or
yeah,
I'm too long and off.
it's a double-edged sword, at least from my perspective, because to dismantle the industry as it is, the government's going to have to get involved. And I'm a fan of for-profit companies. Can't not United and the other ones for the profits that they've generated, but they've done it at the taxpayer's expense, and that's what I got the problem with, because the government's basically subsidized.
Yeah, places like Wells Fargo shouldn't even be in business, frankly, but here we are.
I do think it's kind of interesting. In 2008, we had the big financial bailout, and in 2010, I call it the big health insurance bailout. That has just gone on for the last 15 years.
Yeah.
Yeah.
Well, and
How many
Steve,
times?
I
One more
was going to
point,
say,
Greg.
Steve, oh, go ahead, Mark.
How many times does a large institution need to be fined or, publicly have their wrist slapped and say you've done so bad that you need to there's a community reinvestment act part, right? In these certain areas, you now have to basically give them very cheap mortgages because you've done so badly over and over again to all your clients. How often does that need to happen before maybe some real discipline is instilled?
The size of those penalties, it just can't be a slap on the wrist, because these are multi-billion-dollar international companies.
Yeah. But no, Steve, what I was going to say with that, I agree with you. I think the Affordable Care Act, the intention behind it I think was good. And I think the way it rolled out and the infection that the lobbyists had on it left some bad marks on it. I think the idea at its base, everyone was like, this is a good idea. This helped a lot of people, but it hurt more than we're hurting before. It just brought more people into dealing with issues that weren't already dealing with issues, even though it helped a lot of people who were dealing with issues who now don't deal with issues. So it just kind of flip-flop people's perspective. And there's a movie with Charlize Theron and Seth Rogen where he helps her run for president.
Mhm.
And their bill that they're passing is about energy, and it's got 3 pillars to it. And the lobbyists get their hands on it, and she starts discarding 1 or 2 of the pillars to guarantee funding for her campaign
Yeah.
and participation. And it's unfortunately that's just how it's structured right now, and it takes a lot to change that. And there's a lot more to it, from the bottom to the top and then left and right, in terms of what happens if government's in or out. You have to, people aren't going to take care of themselves. They already don't from a health standpoint. So you can't require them to, but if health insurance go completely private, they're going to say no to a lot of people. So it's a weird dance that unfortunately we've been dancing for decades. And nobody wants to turn the music off because they're afraid everyone's going to just walk off the dance floor. Nobody's going to sit and wait for the next song to start. And it's one of those things where it's going to suck when it happens, but I think ultimately it has to happen at some point.
Well,
And
and
how that looks and how that plays out is still up in the air.
And to kind of double on that, like Dodd-Frank came in because of the mortgage crisis in '08. They did a lot of things, just like Greg said. Now we're looking back on it, but there's a lot of bad marks and things that got involved in that are no longer relevant. There's laws way prior to that. There's no longer relevant in housing. And they're trying to change it. And as they go in, though, they change. This was a huge, like these omnibus bills that get passed, right? That's how healthcare and a lot of housing bills get into the atmosphere at all, is just through these giant packages. So you do this whole thing, but then we go after one thing, because the only way to change anything at all is to be so specific and surgical with one thing to change. And then we have to wait and see how the bureaucracy is going to handle that one change before we can go to another change and then another change. And so, yeah, the system is built for, like, we can speak up as citizens and people, and things can change, but it's one by one. And then they're going to pass a huge package that we don't even know just overrode our change, or, basically did the lawyer thing and gave us a truckload of documents that we got to figure out which one we got to get next.
Well, and then you got the resistance from the industry that doesn't like to change. And I'll use transparent pricing as an example. Transparent pricing was passed in Trump's previous administration, where he said no more can these care networks, these hospitals, not share the price of these procedures. You have to list it. You have to be transparent about it. If you go get an appendectomy, the insured knows exactly what the cost is. Well, they've made it so convoluted that it's still not transparent. So it's just that resistance to change that this industry has.
And they've got all these credits, like what the line item on the invoice is transparent now, but now, if the office is participating with us, or we've got these subsidies or these credits or whatever, that's not the actual cost that's trading hands between the insurance and the facility. But they're transparent with their line item now on that invoice, which is great. But then you find out, well, we're actually going to pay you back 20%, or we're going to give you a bonus, or this and that. And so your net cost is actually different. And transparency, I think, is the biggest thing. I think everyone can get around, and this kind of a hot take, everyone can get around getting screwed. We can understand it if we know exactly how we're getting screwed. But right now, nobody really understands why. And I say this with property and casualty insurance, it's hard to sell and have somebody understand, because we're not giving you something. Yeah. You said people mull over a car and a TV and new shoes because they're actually getting a tangible object. When I sell somebody insurance, and when you sell somebody insurance, they're not going to get anything until they utilize it. And oftentimes they're going to feel like they were taken advantage of several times before they reap a huge benefit from it, right? Like everybody thinks home insurance is a scam until their house burns down. So it's one of those things where it's kind of hard to get past that mental block with the general public of, hey, you're paying for something, but there's really nothing we can give you. You're not purchasing an item, you're purchasing an idea and a concept. And we need you to just trust it. And that's been taken advantage of time and time
Yeah,
again.
they're selling a promise, and a lot of people like to make it promise.
Yeah. Well, let me ask you, Steve. This would be my final question. I know it's a loaded question. You might not have an answer. So, obviously, we're almost a year into an administration, and there's a lot of changes going on. Whether you agree with them or not, from your perspective on the health insurance front, from what you've read of what they're trying to do, what maybe they've already done, where do you think we are in 3 years? Negatively or positively, what do you like that's happening? What do you not like? Just a quick overview of what you think the next 4 years or next 3 years look like if we were to talk to you and at the end of the next election cycle.
Yeah. Well, I mean, just being an American, I like the fact that we're not overly subsidizing that industry with these subsidies. But to your point earlier, it's going to hurt a lot of people.
Mhm.
So it's going to be interesting. The next round of elections, we'll have midterms, halfway through. And in 26, people are going to realize they don't have health insurance or can't afford it anymore. And is that going to turn, again, the political affiliations that we'll see across the country? I don't know. What I'd like to see is we truly make it a free market. These private options should be available in the marketplace. If the big bukas are getting subsidies, why not these private options? And then let the insurer choose. And then you could argue that the insurer of last resort, your concept of the fair plans for home and auto or homes, is what the marketplace was trying to do. But they deepened the subsidies, and the number of people that were allowed to get in there dramatically increased. If they truly made it an insurer of last resort, I think that could be affordable for the country. The insurance companies maybe not as beneficial, and whether or not they'll participate is another question. Because remember when Affordable Care Act came out, some companies said they weren't going to participate in the marketplace, and they changed their tune. So I think it's going to be interesting to see what happens later in 26, because the news is going to be all about people losing coverage. That 14 million is probably going to go down to below 10 million, is my guess. That'll cover. And whether or not they ever allow these other private options in the marketplace, and then can they actually structure an insurer of last resort in this country that is just meant for the unhealthiest group of individuals and cannot be affordable and sustainable.
Do you think if that were the case, right, to follow the fair plan kind of model, that they leave that to the states rather than federal?
Yeah, I was thinking about that. Was the states' political affiliations and ideologies vastly different? I could see some states just wouldn't even have a insurer of last resort. So I think it's got to be federal for two reasons. One, I think it takes the politics at the state level out of it. And two, if it's an insurer of last resort, that means that individual can't get insurance anywhere else, just like with their home. It's in a bad part of the country with bad storms, or they've got a bad history of claims. With your health, you could have serious medical conditions, lots of past claims. So to make it affordable, you got to have a big pool of individuals in that. The only way to do that is make it a national thing.
Okay.
I was gonna comment on that, but I already forgot what I was gonna say because that's what it is. But okay, so I have two things that I want to wrap up with. A joke I'll start with first that I heard recently. So since I'm in the Midwest and just visited some farms recently here a day ago, we were talking about it earlier, like telehealth, get it figured out, stay proactive. There was some meme or something that I saw talking about farmers never going to the doctors. All right, whether they probably have had health insurance, they're probably the other 50% that you're talking about that just is either healthy or maybe they're not healthy and they've never told anyone. And so it was something like, a farmer goes to the doctor and the doctor says, "You're a farmer? Did your wife tell you to come here?" No, I came here on my own. He's like, "Everybody get in here now." Yeah, because my grandpa's the same way. We find him out in the field, rolled over underneath a lawnmower. You're like, shit, should call somebody. But so let me see if I can share this. Just like the United Health thing, Steve, I'm involved a lot recently here with some broker advocacy stuff with mortgage and housing, and it's just really interesting. You talk about lobbyists, Greg. You learn a lot of different things, and just watching how the process goes. Like they just got trigger leads banned, but the president still needs to sign it, so it's not a bill yet as of right now. But you learn a lot from the process. So what you're talking about with these companies is something like antitrust, right? We don't talk about antitrust anymore. I'm going to be in Chicago tomorrow. That's the birthplace of antitrust, right? The meat packing. And now we just let these companies go rogue, and they're totally subsidized, but yet they are private industry. So why are they getting so much, right? That and is there really true competition? Was my point from that I forgot. But you want to introduce all this stuff? Well, it has to be competitive. The system is set up for competition, but if all these bureaucracies and agencies are the only ones competing, is it really competitive? So just like we showed United Health, this is the credit bureaus. So, ever since Dodd-Frank passed, look at the credit bureaus. Straight up, that's Equifax. Experian is one of the rough ones. They do a lot of selling of your personal data and stuff like that. And then TransUnion here, they're kind of just middle of the road. So there's three credit bureaus, but some make more money than the others. Some resell your stuff without telling you, and the others don't. So it is up and down, but they have profited a ton over the last decades. And right now, credit report costs are really high just to get your credit pulled to get a car.
They know what's in their best interest, and when this legislation comes about, they're at the table with their lobbyists. Every big company is like that.
And right here is not a credit bureau, but this is the only report that you can pull from the credit bureaus to get a mortgage right now. Until recently, Vantage, but all the mortgage companies aren't ready to implement it because bureaucracies act so slowly. Look at that line. You're telling me, same as what you're saying about those other ones with health, it's the same thing. These big industries, housing, health, et cetera, it's the Wild West, but it's not really, because it's only the Wild West for 5 companies. They can do whatever they want. So I wanted to show you that. Every time I get a chance to show the stock tickers of the credit bureaus, I'm in. Well, Steve, thanks for taking the time. I hope. Yeah. Is there anything else that we missed that you would want to mention? And definitely mention your contact info and stuff and your branding. We'll put it in the links and stuff.
Yeah, certainly. And thank you for having me. I mean, I love talking about this stuff, and in 50 minutes we can just barely scratch the surface. But always happy to come back, and it might be interesting to see what happens in the first quarter of next year, because the news is going to be all about the new plan. It's going to hit reality for a lot of people at that point.
Yeah, I'm eager to see what the sentiment is, because right now it's the boogeyman no one can see, and then eventually we're all going to be able to see it, and whether or not it impacts as many people as they project, or where's the tipping point where instead of 14 million, are we okay with 11, or is it instead of 14, is it 17? Is it actually only 2 million? Like, what is the actual impact, and what are we okay with in terms of a downfall? Because obviously
those conversations are happening already.
Yeah, they've been happening. So it'll be interesting to see how that looks moving.
There was a quote from Warren Buffett. He said, "The healthcare industry in the United States is the tapeworm on the U.S. economy, and it's 20% of our GDP. So I don't think that's going to change. That cost is
Mm-mm.
going to get paid by someone somewhere, just given the sheer size of it and the the entrenched nature of some of those big players. It's going to continue to be a pay for until major change happens. So I think we're going to see less insured, but either they're going to just not be able to pay their bills. We're still going to get the medical care, and it's still going to be a cost and a drain on the economy.
Yeah, I would say from the mortgage side and housing side, what I'm seeing, I don't think that you're ever gonna make major change in these big industries. It's too far gone. But there are enough people involved that are asking the right questions now, that whereas there were no questions being asked before. So implementing slowly but surely, stair stepping to making it better, we're still gonna be way better off. Because we can't do the big swings. All right, we're all in. Nope, now we're all out. We're gonna repeal. Okay, and we're gonna replace with nothing, and then we're gonna replace with something way bigger that we don't understand. So at least we have what we have and we understand it. But we need to start peeling it back a little bit at a time. That's my hypothesis of what happens, and the only way that you actually see change that works is if people are at least open to editing it.
Yeah.
Well, Steve, thanks again. I like your branding. You got to mention your branding.
So I just go by Insure Me Steve. So you can find me at insuremesteve.us. You can go to meetmesteve.us or quotemesteve.us and get all your insurance needs taken care of.
I like it.
Awesome. Well,
Well-
thanks for being here. Thanks for your
Yeah,
time.
thanks, Steve.
And
Certainly. Yeah, thank you,
We'll
Greg. Thank you, Mark.
as soon as I see the news, talking about exactly what you're predicting them to talk about, we'll get on again.
Okay, sounds good, man. Well, safe travels. Enjoy the north. And we're actually in cooler weather down here in Texas for the first time in August.
Yeah,
Yeah.
it's like 40s at night here. It's pretty nice. And then
That's
yeah,
phenomenal.
I got to go see where my wife is right now. She's been in the casino this whole time, so we got to see what's up.
Well, hopefully she has some winnings.
You never know.
All right, thank you, Mark. Thank you, Greg.
Thank you.
Thanks, Steve.
Bye.